last video, we reported that many countries just joined the gold buying party. In this video, we want to discuss why, of all the assets in the world, do central banks count on gold to hedge their country's economy? Number one, based on decades and decades of data, there's no other asset that can mitigate risk the way gold can. Gold is a well-known safe haven investment prone to acting positively in times of uncertainty and market volatility, is viewed as an asset that holds no liability, adding to its ability to mitigate risk. American banker and financier JP Morgan is famously quoted as saying, "Gold is money, everything else is credit." Central banks look to purchase gold as a hedge against a weakening dollar or any other fiat currency. The Dutch National Bank said they always have a lot of gold in stock. After all, gold is the ultimate nest egg, the trust anchor for the financial system. If the entire system collapses, the gold supply provides collateral to start over. Gold gives confidence in the strength of the central bank's balance sheet. That gives it a safe feeling. Number two, gold is a hedge against inflation. Inflation is the rise in price of a basket of goods. In order for inflation to not dramatically impact a country's economy, the nation requires investments that are not tied to the dollar or tied to fiat money. Gold is not tied to the dollar. In fact, it's not tied to anything. Each time the economy collapses or the dollar weakens, gold goes up. It has zero counterparty risk. The gold market is global, and the metal carries zero counterparty risk out there. It cannot go bankrupt, it cannot default, or otherwise screw its owners. Gold is recognized and valued all over the globe and is always accepted as payment. Number three, gold cushions growth. As currencies become increasingly devalued, banks must ensure their respective economies don't go down with it. Take a look at the Chinese and Russian central banks. Owning gold prevents their economy from tanking entirely. Gold is the ultimate currency, and having a gold holding as part of the central bank reserves provides central planners a powerful tool to intervene in the markets for whatever purposes. Luckily, the US holds the biggest gold reserve. It has as much as twice as much as the second place person, which is Germany. Italy, France, and Russia take the third, fourth, and fifth spots, and China and Switzerland hold the sixth and seventh positions. What is important for you to realize is that while all these central banks we're talking about, the reasons that they hold gold in their own portfolio vary. Like the rest of the countries in the world, they need a hedge. They need a store of value. They need a cushion against economic distress. And we can help you if you want to know more about this. Give us a call at 877-646-5347. We have associates waiting on the phone. We're a US-based company. You're going to talk to a live person who's going to be friendly and answer your questions. If you don't want to talk to anyone, go to noblegoldinvestments.com and download our free guide.
If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open, and we're happy to answer any of your questions.